So what will it really cost you in your business if you don't build business credit? Well, this is exactly what we're going to dive into today during our training. We're going to talk about what business credit can do for you and what it looks like when you don't have business credit, the difficulties of getting financing and the hurdles that you'll actually experience there, what it does to hurt your actual credibility and your reputation, what it's like to continue to give personally guarantees in your business, or the other places you must go to get money if you can't use business credit, how you can use business credit to start a business and get the money you need at the best terms. But what happens if you don't use business credit? What are the other options you'd have, and the more difficult path that you would take to be able to start a business without accessing business credit? And more importantly, the difficulties that you'll face with getting money and the places you can go to get that money, even if you don't build business credit. So today you're going to learn everything about what will cost you if you actually don't take the steps to build your business credit, so you can kind of make the decision on whether or not building business credit is right for you or not. So when we talk about business credit, of course, we're talking about credit that's in a business's name. We're talking about the business basically proving its own ability to pay its debts, and therefore qualifying for money based on the business's ability to be able to pay its debts, not relying on the business owners. It doesn't relate to the business owner's personal credit report. And then the scores are very different between consumer and commercial credit as well. Some of the things that we'll be diving into to discuss. So, but what happens if you don't have business credit? Well, did you know it can be costly, and how costly it could actually be for your business? Because this is something you really need to know. And this is one of the things that amazes me about consumer credit. You know, I've done a lot of training on the difference between having good consumer credit and bad, and the difference in payment. And literally you could buy about half as much car with the same payment with bad personal credit as somebody with good credit. Like you could, if you wanted to keep the payment at $300, you could buy half as much car as somebody with good credit if you have bad credit on the personal side. Well, unfortunately, a lot of business owners don't know the cost of building or not building business credit, and it's kind of equates to the same thing. The terms are shorter, the interest is higher, it's much harder to get the money you need. So there's a lot of things. The question is, do you really know what the true cost of not having business credit can mean? Well, that's what we're going to be talking about. So how is your company funded without business credit? Well, you're going to need money if you're just getting a business off the ground to be able to get started. And if you can't borrow under the creditworthiness of your business, well, what are some other options that you actually have? Because business credit does give you this ability. Even as a brand new startup business, just open your corporation today, business credit gives you the ability to come in and be able to access money as a startup in your business name. Basically, you're from the beginning, the inception of your company, your business is funding itself. Okay, that's actually how business credit works. It lets your business fund itself, where it doesn't need outside funds. It doesn't need you to personally guarantee the credit. So if you're trying to start a business and you don't have business credit, well, there are other options you could possibly pursue. But again, business credit gives you the best option because you're able to get the business to fund itself right from inception. Skip, thanks for joining. Haley, thanks for coming in. Lee Rishia, thanks for coming in as well. Sista, thanks for joining. I appreciate everybody coming in. And La Rishia says, just got my core package and love it. Thanks for this as well. Thank you very much. I appreciate you joining us as a client, and really looking forward to hearing about your progress on these live streams as you continue to build your business credit. So congrats on getting started. So without business credit, you can try to get money from a traditional bank, but it's pretty tough. Okay, first of all, you can't go through a conventional bank because they're typically going to offer SBA loans, which we'll talk about today. So you kind of got to go through a fintech lender. So right away, you've got to go through a fintech lender, especially if you're just getting your business started. They're going to absolutely want a personal guarantee, and your ability to get money is basically based on your personal assets, what you can serve up as collateral, and the quality of your personal credit score. Okay. And the other problem is that they're going to put hard inquiries on your credit report. Your FICO scores are going to go down. And again, your ability to get approved is based on the amount of worth of your personal assets and your personal credit quality as well. So it is an option. You can't go through a big bank. Typically, you're going to have to go through a fintech type lender, but it's just, you're going to be guaranteeing that debt. It's going to be based on your personal credit quality. It's going to affect your personal credit scores adversely, which we'll talk about a little bit more. It's going to put inquiries on your credit report, which can make it harder to get other kinds of money. So obviously, a bank wants to make money on its loans. So without business credit, well, they consider you to be riskier. It's the way that it is. Think about it like this. If you go to get a car loan and you don't have good consumer credit or established consumer credit, it's a big uphill battle. As a matter of fact, I just had dinner with one of my buddies last night. One of the smartest dudes I've met. Really young guy, looking to become a billionaire. He will be a billionaire, I assure you. And, he moved over from the UK. So he talked about, the struggles that he had and getting a car loan over here because he didn't have any credit established in the United States, right? So a lot of people face that. And the reality is it's just as difficult for your business. When your business is out trying to get money and it doesn't have any business credit established, then it's already seen as high risk. As a matter of fact, not having business credit established will automatically give you low scores with Equifax Experian. That's right. Equifax and Experian will give you low failing business credit scores that indicate you're very high risk of going out of business just because you have no credit. Then lenders and credit issuers see that. And then what happens is they just don't give you the terms that you really want to get. Okay. They're less likely to believe that you're going to pay them back. The loan is riskier. And so what that means is it means, first of all, you pay higher interest rates, and higher interest rates mean higher payments. Then you pay higher fees. You pay more money out of pocket to be able to get the loan. But the worst part is you get shorter payment terms. And this combination of short payment terms and high interest rates, which are sometimes seen as like payday advance type loans, merchant cash advances, revenue lending, they're very expensive money. And that's what you really get when you're not establishing business credit. So let me give you a simple example. Well, the first of these loans we got as a company, here's the math. We got a $75,000 loan and our payment was $9,000 a month. 75 grand, $9,000 a month. Now, once we established our business credit and did the right things, we were able to get a $350,000 loan, $350,000, and our payment was $4,500 a month. So our payment was half as much, and we got over $250,000 more money. How's that possible? Two things: low interest, long term. So that combination of lower interest and long term is what gives you a lot of money with very affordable payments. But the opposite is true. When you get high interest, high fees, short terms, your payments are very high. And especially when you're just getting a business off the ground, this is tough. It's tough to get the money you need because you get these outrageous terms that are hard to pay back because you don't have business credit established. Now, you could try to use personal credit instead, but it's a terrible idea. Okay, for a lot of different reasons. First of all, your consumer credit scores were never designed to fund a business. Mathematically, they were not designed to fund a business. So, for example, inquiries on your personal credit report will hurt your personal credit, not a big deal, but they will hurt your ability to get other kind of loans. And this is the biggest mistake I see business owners make. They try to fund a business using personal credit cards, for example. The problem is those personal credit cards they're getting are putting inquiries on the personal credit report. One inquiry can cost you $25,000 in funding for a program called Credit Line Hybrid. They don't like inquiries, especially recent ones. So every time you put an inquiry on your personal credit report, you hurt your ability to get real credit lines and loans. So you never want to use personal credit to be able to fund the business because you don't want those inquiries on your personal credit report because that adversely affects your ability to get business loans. But the bigger problem is utilization. 30% of your consumer FICO score is utilization. What percentage of your high credit limits you're using? So if you go try to use personal credit cards to fund the business, then you carry a high balance on those credit cards and absolutely destroy your personal credit scores. I mean, you could drop them 100, 200 points because you're carrying high balances. Then a lot of people come in after the damage is done and say, Ty, how can I move these to another one? How can I now do the right thing? Well, it takes time to do the right thing at that point. So there's a lot of adverse consequences when you come in and use personal credit to fund your business when it wasn't designed to, because the mathematical model that is FICO will crush your consumer credit scores when you're trying to use that for more than it's supposed to be used, like the funding of a business. Then it's harder to use the personal credit to get money that you would have been able to get if you didn't damage it, like loans and credit lines that you legitimately could have actually obtained. Now, Michelle, thanks for coming in. And Freedom Hall says, I have a client with startup, Black owned with credit scores in 700s looking for funding. Also a veteran, a lot of different options there, including Credit Line Hybrid, where they can get up to $150,000 in financing, and some other specific options that could work for them being a minority-owned business, including veteran-owned business. Give us a call to talk more about what we can actually do there. Or you can also run their information into creditsuite.com/get funding, and we can tell you there what we can do as well. Alethea, good afternoon. Thanks for coming in. 100% disabled veteran. Thank you for your service with Fair Credit and Startup with LLC. Really need funding. Dad, this can help you as well. And you should look at the training I did last week on minority-owned businesses and how to get money, because that has a lot of different options that could work for you as well. And Juan, hello. Thanks for coming in from YouTube. So if your business fails, another problem is that you're personally guaranteeing all those debts. So that's the other problem with not having building business credit is that, look, a quarter of businesses fail in the first year alone. That's the statistics as of currently, as we look into going into 2021. So the problem is is that, you're getting into something inherently risky, starting a business. Even if you're a good plumber, doesn't mean you're good at running a plumbing business. Let's be honest. So the problem is if the business fails, well, you're on the hook personally. So if you put all your personal credit cards and use that to fund a business and the business fails, well, then now you got a problem. You have all this personal credit card debt and a business that doesn't exist anymore, and you got to dig your way out. So some more issues with trying to use your personal credit to be able to fund your business. Now you could try bootstrapping it if you have the funds available. Okay, maybe you have thousands or tens of thousands of dollars sitting around to be able to fund the business. And if you have enough money, you technically can keep putting money in. You can keep putting your own money in to personally fund the business. This is what I did when I started my first business. I thought I had enough money saved to do it. I didn't. I had to go back to work and work my job while I was actually coming in and trying to get the business off the ground. And I had to do that for a while. So it is possible to bootstrap a business, but it's very expensive. And sometimes it could take you 2 or 3 years to be able to still have to put money in before the business is profitable. I don't want to use Amazon as an example, but Amazon, went 20 something years without being profitable. So again, to be able to get a company that's actually generating enough money to pay you and be able to pay off the money that you put in could take years and years to do. So it is an option to bootstrap a business if you're responsible and save a bunch of money, which a lot of people are going to save 10, 20, 30, 40, $50,000 to get the business off the ground. But again, the problem there is that it will take you years potentially to be able to get the business established enough where you're able to pay that debt back. So the question is, do you have that money on hand? And if you do, are you able to live without it for years while the business is actually making enough money to pay you back? Look, what I found in business is one of the most important lessons I've ever learned is that everything takes twice as long as you think it's going to take, and it costs twice as much money as you think it's going to take. So when we ever make a move on any project, we figure out our best guess of time frame, our best guess of cost, then we double the cost and we double the time frame, and that is what we move forward with. That's how true that rule is. And a lot of business owners are watching this going, oh yeah, I've lived that. So when you're starting a business, it takes way longer to be profitable and make real good money as you think it will. And it takes a lot more money than what you typically think it's going to take. That's one of the big adverse consequences of trying to come in and bootstrap the business. Okay. But again, if you've got money around it, it's possible. It's just, it'll take you many years if you even do get it back to be able to get that money back. Now you can try venture capital as well, but the problem with venture capital is that they typically get involved once your business is established. You have to be generating profit. So usually they're not going to help you get the business off the ground. But the other thing to keep in mind with venture capital is that, they really are looking for something that's like paradigm shift businesses, like unicorns. They want really high risk businesses that are doing outrageous things. So, an over-the-road trucking company probably is not going to get their attention. A real estate investor is not going to get their attention. Venture capital isn't going to fund typical standard type businesses and industries that kind of already exist. They're looking for disruptors. They're looking for people that are creating new verticals and new industries. And if that is you, well, venture capital is a great way to go. But if you're not coming up with some concept that's so off the wall, a never seen before type concept, or really disrupting your industry, or something that could be a multi-billion-dollar industry, then you're really not going to be attracting much of venture capital. Now, angel investing, if you're starting a business, that's a way to go. But a lot of angel investors want you to find informal or formal investors, they want you to get affiliated angels first, which means unaffiliated angels, people you don't know that will give you angel investing money to start a business. What they want is they want you to have other people that you do know around you that are affiliated with you to have given you money first. So first obstacle is you have to get angels of people around you to invest money, which means you got to go to your families and friends. I'm not a fan of that, but you have to do that to even really get a lot of other angel investors involved. And another problem with them and venture capital is that, hey, they all want you to an equity stake in your business. Venture capital could want 30, 40, 50, 60% ownership of the business. Angel investing could want 10, 20, 30% ownership of the business. So you're giving away a massive amount of equity in the business, even to get these guys in the door. And if you do have something that takes off and becomes huge, well, you're getting a significantly reduced stake from letting these people get involved and get you the money early on. And depending on angel investing means, you're depending on investors having some discretionary income. Okay. So again, you really need people to be able to have the money to put into this, to be able to give you the money, and they're going to want ownership stake. And especially when it comes to venture capital, well, the problem there is they're going to actually want you to have a seat at the table. They're going to want to guide you and tell you what to do. And let's be honest, we're entrepreneurs. A lot of us don't like to be told what to do. It's why we're here. And the minute you start bringing a lot of investor money in and they start telling you what to do, it doesn't go well with a lot of entrepreneurs. This is why founders, those of us that found companies, we're typically not the ones that take our companies to $100 million plus in revenue. I'm not saying it doesn't happen. Look at Jeff Bezos. I mean, for example, it definitely does happen. But typically, we're not the ones, because when the SEC gets involved, when investors get involved, when all these babysitters get involved, a lot of us founders lose interest because we started a business because we want to do our own thing. We don't like to be told what to do. And when it comes to angel investors, when it comes to a venture capital, this is something else that you have to contend with and think about as well. And Lakeisha, thanks for coming in from Atlanta, Georgia on LinkedIn. I appreciate you coming in. And Freedom Hall says, thanks, Ty. I've been following for years. Great work. I thank you very much. I appreciate that. Uber Pro says, I'm a gig worker in business 2 years plus with 1099, bad credit, but everything is paid, just still on the reports. Can I get business credit? You absolutely can. One of the benefits of building business credit is that you don't need to have any of the things that you need to get a typical loan. Your personal credit doesn't matter. You don't need collateral, and you don't need to have cash flow. This is the only kind of money I've ever found that any business can qualify for. As long as you set up an entity and have a business, you can get this. It's great for gig workers amongst many others. So look, along the way, if you're getting value from this, do me one favor, hit the like button, hit the love button. It lets me know, and I can see it in real time, that I'm hitting the point, and it lets the social channels actually invite more people in. They only invite more people in if you're engaging and commenting and liking and loving the video. So I appreciate in advance you doing so if you're getting value from this. So you can also try crowdfunding. Crowdfunding is a great way to get money because sometimes it doesn't have to be paid back. It's called rewards-based crowdfunding. So with crowdfunding like Kickstarter or Indiegogo, you could throw up a project, you could be able to share it amongst your social network, and then you're able to potentially get funded. Sometimes they prepay, they're pre-ordering for the product that you may actually sell. The problem with crowdfunding is that, first of all, only about a third of projects that ever get put up there fund. Still pretty good statistically. But the other problem is that it's not going to work with straightforward businesses, real estate investor, an accountant, an over-the-road trucker. If you're in a standard industry, then you're not going to get crowdfunding. Crowdfunding, like venture capital, like angel investing, is kind of for just something disruptive, something new, something the world hasn't seen, something niche, something different. I always use the same example. One of my favorite crowdfunding projects was this box you put at the top of the stairs. You open the box and a slide folds out. It literally turns your stairs into a slide. I mean, that's freaking awesome. I think that's cool, right? I remember like my neighbor's house riding down with couch pillows down the stairs. It was fun. Not as fun as the slide would have been. But that's something unique and different. Like, I've never seen that before. You've never seen that in a house before. That's the kind of stuff where somebody shares with their friend and goes, you've got to see this. This is crazy. Look at this thing. It's like, it unfolds and makes your stairs into a slide. That's what crowdfunding is for. The other thing about crowdfunding is that it only works if you have a big social network. People have all these stories about Indiegogo and Kickstarter where they put a project on there and raise all this money, but it doesn't work that way. Those projects that take off, they already have a bunch of people lined up first to invest. Okay, then all the social network is sharing that project to make it go viral. So some things to think about. Crowdfunding is an option, but again, if you're in a standard business, it's just not going to work. SBA loans, you can get those as well, but they're hard to get. Okay, per SBA, you have to try all other funding options first. Right now, PPP loans are all the rage, so it's hard to even get any kind of SBA loans. And let's not even talk about the eligibility requirements. To get SBA, you need to have really good personal credit, really good established business credit, tax returns that show profits for years, and then you also need collateral equal to the loan amount you're borrowing. So very few business owners not a lot of business owners get to that level. Statistically, very small percentage of business owners get to that level to qualify for an SBA loan. So I love SBA loans. I think they are fantastic. There's a lot of options, Community Advantage, Express Bridge. There's a lot of options that can work for you, but you have to be a really well-established borrower to get this. And if you're not really well-established, you're just not going to get an SBA loan. The requirements require good credit, collateral, and cash flow. You're not going to get that unless you have, unless you're a pretty well-established business. Now, grants are a great way to go. Grants.gov, you can get federal grants. You can go to grantwatch.com, I think it's .com. And GrantWatch actually gets you access to statewide and community grants. I've done training, youtube.com/credit suite on a lot of grant projects you can work. Works great for rural areas, USDA. You can also come in and get HUD grants if you're in urban areas. A lot of different options here. But again, what I find about grants is grants kind of typically work if you're in a niche. Like somebody came here and said, look, I have a Black-owned business. Yeah, if you're a minority, a veteran-owned business, if you're a disabled veteran, we have somebody on here today that's a disabled veteran as well. Those are minorities. Minorities have a good chance, a better chance of getting grants than non-minorities. It's just what I found. There's a lot of grants out there and contracts for the government and things that are set aside specifically for minorities. So if you're not in an urban area, if you're not a minority, if you're not in a rural area, there's not as many options when it comes to grants. But if you can qualify, it's something to look into. GrantWatch and grants.gov are two sources that you can go. And if you fit within one of those niches, it's possible to get grants. And in our loans, they don't have to be paid back, but they are competitive. There's not a lot of people that can actually qualify. And the ones that do, there's typically definitely a good amount of competition to be able to get those grants. So it's tough to get money for a business without building business credit. You can't go to a bank. You can't get an SBA loan because traditional banks won't help. You can get money from fintech lenders, but it's expensive money. It's really hard to be able to pay back because the term is so short, the interest is so high. Crowdfunding, venture capital, angel investing, you have to have something really unique and different in order for somebody to even want to give you money as an investor. Then you got grants, free money, great concept. But again, works pretty tough unless you're in a rural area. And if you're in an urban area, there's some options there. Or if you're in some kind of minority. But outside of that, it's pretty tough to get a lot of these grants if you're not community, urban development, or in some of these different areas. Okay, so without business credit, how does any business know if your company's even reliable? And that's something else you have to think about, is that keep in mind your business credit reports are accessible by anybody that wants them. And I spend a good portion of my time now training people how to access other companies' business credit reports so they can make decisions based on that. So the questions that come to me in large part are, hey, my company wants to extend other people's credit. How can I evaluate those people to decide if they should be given credit, for example? How do I evaluate these companies to determine if I should buy a company? So there's a lot of people out there, suppliers, lenders, credit issuers, potential investors, buyers, that are actually accessing your business credit reports to make all kinds of decisions about you. It's not the common sense basic stuff we know about lenders and credit issuers. They're going to issue credit cards, loans, or credit lines. It's people that want to extend credit to you on terms. One of the funny stories, I read Sam Walton's book, and he talks about this back in his early days, where he was trying to get people to extend him credit, right? To be able to get the products for Walmart to sell. And this was before anybody knew Walmart. I like how Sam did it. He would always say, we have this little shop in Bentonville, Arkansas. And he always, for as long as he could, he rode the train of trying to play himself out to be a small player. It's part of how he snuck under the radar and got so big. And he talks about how these guys would sneak to the back room and pull his Dun & Bradstreet credit report. And he laughed because he knew they had established credit. But the minute they knew he was some small discounter from Bentonville, Arkansas, they would go in the back room to pull his Dun & Bradstreet business credit report. So it's interesting because if you look at Walmart today, they have 500 plus trade lines on Experian alone. Okay, 80% of the money that goes into Walmart is based on business credit. They built business credit. And if you read Sam's book, he'll talk about this. They built it in large part based on business credit being established. So again, without having business credit established, all these people are looking at your credit reports, your clients, your competitors, your prospects. You don't even look credible. You look like you have a failing business in a large part because a lot of your scores are low just because you have no business credit established. A lot of us don't understand that. We think we're flying under the radar because we don't have any business credit established. But the minute Equifax and Experian know you exist because you file your annual reports year one, the minute that happens, they create a credit profile and score, and they give you a failing credit report and score. And then anybody that's pulling that sees a failing score. They see a really low score that indicates you're a very high risk of going bankrupt, even when you have no credit. So this is the problem, is that other people don't even know you're reliable. They're accessing your business credit reports, and they're not able to see that you're actually reliable because your scores are low or non-existent. So business credit, it just fixes these problems. It does, because first of all, you don't need a bunch of money. You don't need good credit. You don't need collateral. You don't need cash flow. You can get it as a startup. You can get it as a high-risk industry. You can get it even if you're in a standard industry like trucking, or a really niche different industry like building things that go at the top of the stairs to make your stairs into a slide, whatever it may be. So again, business credit fixes all those problems because it gets you money even as a startup. You're able to get it even without cash flow, credit, and collateral. You're able to then be able to have a good reputation established. Your personal credit scores are protected because you're able to use your business credit to fund the business and not put inquiries on your personal credit report. You don't have to gamble your house or your personal assets because business credit you can get without a personal guarantee, without any personal liability. Any type of business can qualify, not just rare niche businesses, but standard businesses, high risk businesses can qualify. New businesses can get money as well as established businesses, and they can even compete with more well-established businesses as well. You work with information that's current, accurate, and unbiased as the business credit reported agencies can make it. So you can access credit reports for other businesses, but also other people can judge you fairly based on what you want you to be judged on when it comes to getting you money and credit from suppliers, etc. Which again makes you more confident in your decisions with other companies that you're doing business with. You don't have to try for hard to get grants or other financing like crowdfunding, which is you can get it if you're in special niche sections, but it doesn't work for everybody. And you don't have to stand in line and compete and try to access that harder to reach capital as well. So some things to think about. And Alethea says, you're so right, maxed out my credit cards. Yeah, look, a lot of us do, because we come in and we start a business and we say it's going to take $5,000 and it takes 10 or 15. And then we go to our second and third credit card, and before we know it, our credit cards are maxed out. We have no more things to leverage. And then we try to go get money and we can't. It's just a common problem a lot of us have. Anthony says, I was able to get approved for almost $5,000 with 4 different Net 30 accounts in only 2 days. Next is no PG store credits. Then last is cash credit lines. And we lit. And he's got 12 exclamation points. So Anthony's got a perfect example here. 2 days into learning this process, he's got $5,000 from 4 companies. He's going to use that credit to build his business. Then he's going to go get credit at places like Amazon, Walmart, all these stores, then Visa and MasterCard. Anthony's a perfect example here of somebody that's funding his business using business credit without accessing any of these other ways that are harder to get that we talked about today. Can someone call me licensed partnership? Give us a call, 877-600-2487. Email us, info@creditsuite.com. And I'll give you that information at the end. And we will call you about a partnership where you can offer business credit financing, white label through us. We help you do so. I don't want you to have to put your phone number in there, because if you do, you'll be putting it in a Facebook stream and everybody can see that, which is why I say that. And Victoria, and then you guys are talking back and forth. And Uber says, do you offer support outside of the pamphlet? Absolutely. We definitely help you build business credit and get financing. As a matter of fact, you get a free consultation I'll talk to you about a little bit later. Just give us a call. We'll help you get your business credit reports for free, even go through those with you. So business credit's a great way to fund a newer existing business. You don't need collateral. You don't need good credit. You don't need a credit partner. You don't need to have cash flow. You can get it even as a startup business. It's just a matter of following the steps that we teach to be able to do so. We're not going to do that today. But if you go to creditsuite.com/EIN, you can get our step-by-step guide on building your business credit. And I'll also teach you how to get your business credit reports for free, tips and tactics here in a minute as well. So look, without business credit, doing business is going to be considerably more difficult and more expensive. It trashes your personal credit because, even as we talked about here, Alethea said the same thing. Yep, maxed out my credit cards. I did too. A lot of us did. I used home equity. A lot of us make these mistakes. That's why I teach what I teach today. I lived what I'm telling you, okay? I went and leveraged my house to start a business because I didn't know about business credit, right? Then the mortgage crisis occurred. It was a mortgage company. Mortgage company failed. They came after all my personal assets, liquidated my bank account. It was a nightmare. It personally pushed me to bankruptcy, all because I didn't know this. But business credit avoids all that. You don't have to trash your personal credit. You could leave your personal credit scores and credit cards intact because you don't need them to fund your business, okay? You don't need to unnecessarily put your assets in jeopardy, stocks, bonds, 401ks, cars, homes, because you're personally guaranteeing things in the business name when you don't need to with business credit. You can keep your savings. You don't have to rely on family members and friends. 75% of entrepreneurs get their startup capital from family and friends. I don't like to borrow money from family and friends. I don't borrow money from family and friends unless it's an absolute dire emergency, which I've had to borrow money from my mom and dad before in my life, two or three times under dire emergency straits. And I always paid them back, and they always knew I would. Okay, but again, it's not a comfortable thing when you have to be in that. Business credit helps you avoid that. It helps make you be more credible. It helps you get away from the guarantees. It helps you get away from the credit checks. It gives your business the ability to fund itself. It makes you more fundable. Okay, as well, it helps you get more money at better terms. In those examples, it helps you get a $350,000 loan at a $4,500 payment versus a $75,000 loan at a $9,000 payment. What's the difference here? A well-established business with good business credit versus one that's not. So you get better money at better terms as well. So if you'd like to learn more about building your business credit, get your business credit reports with Dun & Bradstreet Equifax Experian for free. Cost you $249 if you get it from the bureaus directly. We'll get those with you. We'll give you tips and tactics to build your business credit. We'll get a fundability assessment to see what you need to fix on fundability to become more fundable for lenders or credit issuers to want to give you more money. And we'll talk to you about all the loans and credit lines you can get now. Somebody just gave me an example of, minority-owned business with 700 FICO scores. There's like 3 or 4 kinds of financing you can get. So in that kind of scenario, you give us a call. We talk to you more about that as well. There's 3 ways to get a consultation with us. Give us a call, 877-600-2487. Email us, info@creditsuite.com. The third is go to creditsuite.com/consult and schedule a call. Don't forget to get our guide on building business credit and/or our checklist. It's up to you. The guide is available at creditsuite.com/live. You can just go to creditsuite.com/live. You can go to creditsuite.com/live-checklist to get our actual checklist, and a lot of ways you can follow us on social as well. Hello, thanks for coming in, Brilliant Davis. And Willem says, what's the average timeline from start to finish for building business credit? So, okay, think of it like this. There is no answer to that, like there is no answer to consumer credit, right? If I asked you how long it takes you to build consumer credit, it's a hard answer to give because there is no end. Like you're indefinitely building your consumer credit, the same as you indefinitely build commercial credit. But I can tell you this, you can get to the final tier. And in my verbiage, the final tier means you can get auto financing, you can get computer leases, you can get store credit at almost every major retailer, you can get a Visa card, a MasterCard, kind of cash credit. You can get all of that stuff. The final tier, our clients get there in about 6 months' time. Now, don't get me wrong. I often tout that we take years of business credit building and condense it to only months, right? If you're doing it on your own, it could take 2-3 years to get there. But our clients are getting to that final tier of building business credit in about 6 months. The final tier of what you'll do, getting Visa card, MasterCard, getting auto financing, getting commuter leases, store credit, all the end phase takes about that long. But you'll never stop. You'll continue to build business credit even after that. Brilliant Davis says, for business credit, if I know owners who are already using their personal credit, can they still qualify for funding? They absolutely can. But what's going to happen in that world is that if their utilization is harmed, if they have a bunch of inquiries, it will reduce the amount of funding they can get. It might even disqualify them altogether. So we've got to look at how much they've already damaged their personal credit along the way. But there's a lot of other ways to get funding outside of personal credit. You can get it based on your collateral. You can get it based on cash flow as well. So there might be options there. And Brilliant Davis says, I just became a partner. Awesome. Great. I'm glad you're working with us. And every Tuesday at 3 o'clock Eastern, I do a partner webinar just for our partners that teaches all the things about owning a business, running a business. So make sure you tune in there as well. And I can give you a lot of advice on these type of topics. So if you'd like to learn more, if you got value, first of all, hit the like button, hit the love button. I see in real time who does that. And I don't have very many people, so I don't know if I missed the mark or not. So hit the like button, hit the love button, share it. It helps me know I do a good job. It's the only thing that I ask for. And it also lets the social channels know that this is valuable content. I'm not here trying to pitch stuff, and I'm giving you value. And then it lets them show it to more people. That's how it works, right? Facebook shows it to a small group of people. If those people like it and comment and engage, then Facebook shows it to more and more people. But if you don't do those things, then they never show it to more people. And I want to help as many entrepreneurs as I can. And if you got value from this, Tuesday and Thursday at 1, 11 o'clock on Wednesday, all Eastern time, we go live on Facebook, YouTube, Periscope, and LinkedIn. And we also have hundreds of videos on our YouTube channel. We have a podcast, the Business Credit Financing Show, with over 400,000 downloads. You can listen on the go, to all kinds of experts that teach all kinds of things. The guy I had on today was teaching all about setting up the branding of your business. Michelle, who I had on last week, is teaching you how to exit your business and sell at maximum value. If you want to talk to these top people in their industry, have to have a very successful podcast to get these type of people in, then go tune into our podcast as well, the Business Credit Financing Show. Daily tips on Twitter, Instagram, those type of platforms as well. You can access all of these links at the top right of our page, creditsuite.com. That's creditsuite.com, top right of our page. So make sure that you follow us on social to learn a lot more. And that's it for today. So I look forward to seeing you in our next training. We talk about more cool ways to get money for your business. Please love the video. And if you got value, please subscribe to our social channels. If you're on YouTube, click the bell beside subscribe, click all to get notified whenever we go live. And we will then be talking to you more about other ways to get money for your business. And what Woody says, I need a grant writer. I don't know of a grant writer. You're the second person that's asked me that. I don't know who writes grant proposals. I'll look into that, see if I can find somebody, but I'm not sure off the top of my head who can write grant proposals for you. I would look at Upwork, or I would look at Fiverr FIVERR. Those might be some ways to do it. Brilliant David says, so would it be better for me to submit the business owners I know for direct funding instead of pushing the finance suite? Instead, give our support team that question and we could better help you there. The short answer is it depends on the person. If they need business credit, you want to sell them both. If they just need funding and they don't need business credit, then you might not need to. So hopefully that provides advice. And reach out to us on our support team. Go to contact us at the top right of your portal. Reach out to our support team and our funding team. We can walk you through those questions as well. Thanks, everybody, for tuning in. Have a great day. And I look forward to seeing you next week where we talk about more cool ways to get money to grow your business.